And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Katie Greifeld taking you through to that closing bell with the global simulcast. It's already started. There's Carol Massar. There's Tim Stenovec. Welcome to our audiences across our Bloomberg platforms, television, radio, our partnership with YouTube here on a really volatile day, at least in some asset classes. And after the bell tonight, Carol, we get a slew of earnings, including from Netflix.
Well, you talk about some of those asset classes, precious metals, right? We've seen silver and gold, a big pullback in today's session. We just had a guest on. We were talking about, just taking a little money off the table, but still thinking that that is still a good trade for investors.
Netflix, certainly the star of the show in the next few minutes. But don't forget, we're still looking at what's going on with regional banks. Western Alliance is reporting at 4:30. We're going to have those numbers for you. We did hear from Zions yesterday that maybe helped to, lessen some of the concern that folks had about it being less idiosyncratic and more systemic when it comes to risk for these regionals.
Absolutely. I mean, you can see that in shares of Zion rising another 1.6% today. You can see that, too, in shares of Western Alliance rising 1.5% in anticipation. But really, again, it all comes down to Netflix.
Yeah, I do want to point out, though, too, I mean, so far this earnings season has been good. I mean, we got the banks, but then I don't know if you saw this morning. I mean, a beat and raise by General Motors, a beat and raise by General Electric, a beat and raise by 3M. So you're getting a lot of these companies that, no offense to Netflix, that are probably much more reflective of economic conditions. And at least for right now, they seem to be doing well.
A broadening out, right? We always say that that's important in the marketplace, certainly in the trade. Also good to see that in earnings, Romaine.
All right, let's walk you through the daily numbers here as we wait a slew of earnings across the wire now that we get the closing bells. I'm going to start with the Dow Jones Industrial Average because that is going to close decidedly in the green, up more than 200 points or about 0.5%. The NASDAQ Composite down 0.2%. The NASDAQ 100 down less than 0.1%. And the S&P 500, it takes a while for these numbers to settle, but we're just going to call it unchanged on the day, right around 67.35 and change. The Russell 2000 down 0.5 percentage point.
All right, quick check on the S&P 500. Not quite an even split, a little bit more to the upside. 299 names, Katie, gaining ground on this Tuesday, 202 to the downside.
Which is interesting because you take a look at the sectors. You had more sectors that were lower on the day, 8 to be exact. Only 3 sectors managing to finish in the green. They were consumer discretionary, industrials, and healthcare. What didn't do too hot today is utilities, communication services, and materials. But still, overall, the S&P 500 unchanged.
Yeah, interesting, right? To see that it almost is like we were waiting for a few things, like earnings, whether, we get that inflation report on Friday, looking for some more clarity about kind of what's coming out investors and certainly what it might mean for our Fed policy.
All right, we are getting those Netflix earnings crossing the wire right now, so let's dive into them. Texas Instruments also crossing the wire on Netflix. I'm going to start with the guidance. The company says that for its full year, it sees revenue of $45.1 billion. It had a previous range of 44.8 to 45.2, so basically guiding towards the top end of that range, but maybe just a smidge lower. Now, here are their results for the third quarter, their fiscal third quarter. Free cash flow was a beat, $2.66 billion. EPS was a beat. I take that back. EPS was a miss, $5.87 a share. The street was looking for $6.94 a share. So a miss on EPS. On the revenue side here, it also looks like they came in a touch light, $11.51 billion. The street was looking for $11.52 billion here. And of course, we don't get those subscriber metrics, but overall, the two metrics that they really want us to pay attention to with regards to revenue and with regards to bottom line EPS, it looks like a modest miss in the most recent quarter and a modest guide to the top end of the range for the rest of the year.
Well, you can see the disappointment in Netflix shares right now, down 5.5%. We'll dig deeper into that, but let's take a quick detour to what's going on with Texas Instruments right now. Another miss when it comes to third quarter EPS, missing estimates coming in at $1.48 in the third quarter. The consensus had been for $1.49. When it comes to fourth quarter revenue, the guide there is for $4.22 billion to $4.58 billion. The estimate had been for $4.5 billion. So a range there, you average that and it comes in at the low end below that estimate. So you can see Texas Instrument shares down about 4% in the after hours hours trade.
Also down, Netflix continuing to watch what's happening in the after hours, down about 7.3%. Our own Lucas Shaw out with his first take on earnings, writing that a tax dispute with Brazil cut into third quarter earnings. It mars results that otherwise fell in line with Wall Street estimates. Netflix had to pay about $619 million to settle a multi-year tax dispute with Brazilian authorities going back to 2022. But the company said it would have beaten forecasts if not for that expense. Shares down just about 5.75%.
Yeah, I mean, keep in mind that this stock has been certainly an outperformer this year, up about 39% year to date. But again, the big headline in terms of the outlook, Netflix seeing fiscal year revenue $45.1 billion, had seen about 44.8 to 45.2, so a bit of a range, but that number below the higher point of that range, Romaine.
You know, I always like to look at sort of, they talk about their content and some of the big hits that they've had. Of course, a Happy Gilmore, which is one of their more successful, at least in terms of streams in the most recent quarter. My Life with the Walter Boys and Hunting Wives and a few others. But it gets to this idea here that assuming that we're not actually being able to see what those subscriber numbers are, the question is, how is this actually adding to the bottom line? How is this adding to the top line? And that's going to be a big question for, I guess, the one analyst who's allowed to ask questions on that conference call.
Yeah, absolutely. Have to imagine it's made that man's job a little bit more difficult here. You dig into some of the international markets as well. This is what we had been discussing with an analyst over from Morningstar, that when it comes to the growth opportunity, there's a lot of focus on international. It seems like when it comes to Latin America, when it comes to APAC, revenue there falling a little bit short of expectations for both of those regions. The U.S. and Canada and Europe did manage to just slightly beat expectations. But again, it's where you expand to next. Is the U.S. market saturated? That's also one of the big questions here.
What does the content slate look like, too, especially with potential M&A? Greg Peters telling Lucas Shaw back in, just 2 weeks ago at Screen Time that they're more builders, not buyers, yet our reporting today from that team shows that, well, maybe they could be interested in Warner Brothers Discovery, at least parts of Warner Brothers Discovery. So if they get a movie studio, how much will they pay for that movie studio? Or maybe this is just trying to bid up the price so other rivals have to pay more.
Yeah. Maybe they could lean on Mattel for some IP or something. Mattel reporting their earnings just crossing the Bloomberg terminal. Investors don't like it, down about 14%. Let's go right to the outlook. Company still sees fiscal year adjusted EPS of $1.54 to $1.66 a share. Estimate is $1.61. Still sees fiscal year net sales at constant currency up 1% to up 3%, and fiscal year adjusted gross margin of about 50%. The estimate on the street was about 50.3%, but the company says sales dip as tariff uncertainty delays Christmas orders, and that's not a good thing to hear, because you know how much the holiday season is so important to this company, Romaine. Capital One also out with their report as we were speaking here. The most recent quarter adjusted EPS comes in higher than expectations, $5.95. The street was looking for $4.39. Net charge-offs also better than expected, $3.47 billion. The street was looking for about $3.7 billion. So decent bottom line and a slight improvement when it comes to the negative of charge-offs here. We should also point out the company said its efficiency ratio actually widened, I should say, 53.8%.
Yeah, and you can see Capital One shares moving slightly higher after hours. This is a company, too, that had a high bar when you consider that Capital One shares higher by nearly 23% on a total return basis in 2025 through today's close. I do want to circle back to what we're seeing with Mattel, with Netflix. I actually have a way to tie them together. You talk about IP, Carol. Actually, there was a report out earlier today that Netflix has picked Mattel and Hasbro for K-pop Demon Hunters toy partnerships. That's not helping out either stock at this moment right now. And I think, to pick up what you were saying about Mattel, Carol, that to see tariff uncertainty delaying Christmas orders, I mean, this is prime time, obviously, for a toy company, and really speaks to where we are when it comes to the global trade landscape. Yeah, I mean, listen, you're talking about a toy industry that gets most of its products from China, and that has been, Tim, as we know, a key target of President Trump's tariff increases.
Okay, so other companies reporting, too, after the bell. Intuitive Surgical, the maker of the Da Vinci surgical robot, shares surging right now, up more than 12% in the after hours. The company sees 2025 adjusted gross profit margin 67% to 67.5%. Third quarter adjusted EPS beat estimates, Romaine.
All right. I also just want to very quickly just go to Omnicom because, of course, we're going to talk a little bit more about Netflix and that build out of its ad platform. Omnicom, one of the biggest ad platforms out there, they reported earnings relatively in line with estimates, $4.04 billion in revenue in the most recent quarter and $2.24 in adjusted EPS, relatively in line with estimates. But you see a slight tick to the downside in the shares in the after hours.
All right, folks, as we wrap, we've got Mattel certainly dipping big time in the aftermarket. It is down about 20% here as we speak. Actually, now down about 11%. TI is down about 5%. And then, of course, Netflix down almost 6% here in the aftermarket. So a lot for investors to kick around, certainly into the Wednesday trade.